Yo, what's up? What's up? So, welcome to another brand new month, brand new session of live Forex trading with your host, Peeling Mindset. On the YouTube, guys are saying, yo. I hope you guys are doing well. This is a brand new month, brand new day. Looks like pound yen is moving pretty well right now. It's actually moving pretty solid. So, this is pretty good. Just trying to set up my system for the first few minutes, and people are hopping in pretty good. And the analysis on the today's pound yen market is pretty simple. There is a daily rejection on the top, and looks like a London market has actually tapped that daily rejection level and is rejecting right now. I'm looking for sells below 152.210. Very simple idea. Why am I looking for sells below 152.210? Because there's a clear traffic on the left hand side. And in relation to my channel sort of analogy, look at this. This was a roughly drawn channel. Price has rejected off of that in about channel sort of a vicinity. So there's a higher chance price could continue down. And right now it's moving down so heavily. Honestly, it's moving down so heavy, so pretty. So this is really beautiful. I'm looking for sells below 152.210. So we'll see what's going to happen. In the next 24 minutes, this hourly candle is going to close. So we'll see what's going to happen. So I see Tony on YouTube says, New York and London market are different. And if so, how do I switch to New York servers because I'm on London? I don't know what you're saying. If you're saying to me you want to trade New York, I mean, you just come around New York session time. That's all. Ooh, and my alert on pound yen has been hit. The price after rejecting that daily sort of a level right now is heading down so hard. It's kind of interesting the way it's moving right now, pound yen. Look at this, right? So today's daily candle moved all the way up with London volume, and right now it's pushing down. It's confidently pushing down. If I have to make the chart naked one more time, look at this. Today's daily candle is bearish. So last daily candle closing bearish. I mean, obviously, this daily candle would copy some of the characteristics from the previous candle. But looking at the way it's moving right now, it's made that top wick, liquidity wick, and it's starting to push down. So I'm anticipating bearish sort of a movement here. So we'll see how the candles are going to move. If the candles are going to break the 4-hour support and is actually going to scale into selling sort of a range on the left-hand side, this is going to be amazing. Amazing. Amazing go. So what I'm going to do is I'm going to wait for this 2-hour, 1-hour candle to close. It's going to close in the next 23 minutes, so it's kind of lovely. If the candles are going to close in the next 23 minutes below this 152.210 sort of a level, there's a clear traffic and sales will be really good idea. Really, really good idea. In about 50 pips range here. I like it. Really like it. The way it's moving down after rejecting that 152.765 sort of a level. I mean, the candles are finishing strong bearish and looks like the momentum is bearish here. It's pretty strong bearish here, right? The most recent price action is from a resistance, breaking support, heavy bearish candles. Just have to see if the hourly candle finally finishes below 152.210, and that's going to be lovely. Whoever took a trade, I mean, somewhere around here, your sell must be working. So the best idea will be to secure and manage your position. Why? Because this gray area is a support area. And if the support area is going to act around, you have to be clever enough to manage your position. Don't let the whole position exposed. You always want to manage your risk. That's what you want to do. Manage your risk. Simple, simple, simple. And let's see in the next 20 minutes what's going to happen. In the next 20 minutes. Wow. Candles are finishing bearish. Simple as that. Lovely. This is lovely. And candles are printing bearish, printing lower low, lower high at this point in time. Individual candles breaking lows. So clearly the momentum is bearish. No doubt it's not bearish. It's absolutely bearish at this point in time. It's very nice. It is very nice. Let's look at gold and see what gold is doing too at the same time. Gold right now is just hanging around there. It looks like the most recent price action on an hourly is quite bearish. Today's daily candle is also bearish, has broken the previous daily candle's low, and there are possibilities for the candles to push down. There's a clear range on the left hand side, but again at the same time, this is the first day of the month, right? So to expect volume, I mean, candles have to make clear structure. First thing, there is a clear traffic on the left hand side, but again, this gray area was the area that the price was holding against previously. That was a strong resistance. Obviously, we broke that resistance with just a lot of volume, a lot of momentum. The last few days of the monthly candle, and right now it's retracing and it's hanging around that area. So there is still chances for the candles to push up if the candle stays above this gray area. So for gold to flip down in this 4-hour candle, it has made the top wick, which is good. It's showing signs to flip down or push down. All we got to see is this 4-hour candle flip bearish, stop breaking its own low, and that could be the confirmation. And in the next 18 minutes, we will see this 2-hour candle close again. So this 2-hour candle close is also going to give us some sort of confirmation. So the real question we have to ask this current 2-hour, 1-hour candle is it actually going to close above this gray area or below? If it's going to close below, there is a chance it can actually push down furthermore down. But again, at the same time, I have to wait and see. Because if it's to push down, I mean, there's a lot of target, a lot of range on the downside. It's the first day of the month, so I'm not expecting a lot of volume. We will see. We will see what's going to happen. We will see what's going to happen. Rum pum 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 pum. Rum pum 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 pum. Rum pum 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 pum. Yeah, candles are hanging around the gray area. Engaged with this area several times. So have to see how the candles are going to close. Simple. Let's look at pound USD. Our pound USD is also showing some sort of bearish sign here, right? I mean, pushing down heavily. Looks like today's candle push. Actually, this is July's candle. Sorry about that. So August is August 1st candle, right? So the candles are pretty bullish at this point in time. This 4-hour candle is bearish on the other side, right? I mean, this candle is almost engulfing the previous candle. Daily candle is still bullish, opened up with a gap. So the price actually skipped some price and opened up down below, right? And at this point in time, the price has already filled that gap. On a 2-hour sort of a time frame, this candle is breaking the previous candle's low. And it looks like this is a potential rejection area. If the candles are to come back in this dirty range, have to see how the price is going to respond around that area. If the candles are going to push down, there is clear traffic on the left-hand side, and there are a few targets too. So have to see. Have to see what's going to happen. In the next 16 minutes, we will see a strong 2-hour, 1-hour candle close, and that's going to tell us if the candle is trying to push down. I mean, clearly after the push down from the top, right? Now, this was the almost end of the July's month, and July's end pushed the candles, started pushing the candles down, right? And what we know is candles move in cycle. For example, if I have to go into the daily time frame, actually, this is going to be better. Let's just go into the daily time frame. And look at this. let me draw how the price change its cycle throughout the months, right? So what I'm going to do is I'm going to take the set of 15 days as a turning point. So what I'm going to do is this right here was the end of the month right here, May, dun, dun, dun. Oh, look at this. So June from June 1st till June 15. The candle started pushing down. Okay, so the momentum was still carrying on. So the momentum carried on from 15 to all the way down till the 30th, right, of June. Now from July 1st, the candles were kind of retracing all the way till 15th. Now from 15 again, the candles started pushing down. Now, if you see the candles on July, let's say July, or so July 30, it retraced all the way up, right? So there was sort of a, I would say noise. I would call this a noise, right? So I would actually call this a noise. Just give me a second. I would call this a noise, right? Now, at this point in time, the candles are around the 30th of July, and there is a chance the first half of the month could be bearish in pound USD. Why? Because the most recent price action here has been bullish in a daily sort of a time frame. So I'm only thinking about that, you know what, if the cycle of market is changing, because we have been bullish for some time, bullish for some time. So if we are to push down, this is a right point. This could be a right point. So I have to see candles breaking the lows because we have clear traffic on the left-hand side. So we will see what's going to happen. And this month, August, we have the monetary policy around the, I think it's the first week. Yep. So we have the monetary policy in the first week. So definitely the first half of this month is going to be explosive. And there has been really interesting articles, really interesting ideas about UK's monetary aspect and all the talks about monetary policy rates. There are a lot of articles and the latest news about these stuff. And they are saying that, you know what, no matter how much the UK's economy talking about, they are relieving the economy by boosting with stimulus checks and tax easing and stuff, it's still in the shitters, right? So we will see how the monetary policy is actually going to be acting out in pound yen. It'll be lovely to see some bearish momentum here. It will be lovely. Pound USD, we will see what's going to happen. Now again, at the same time in pound yen, if I have to go into the daily time frame, make the charts naked, let's see how the price moved with the cycle, right? So we're going to start from a start of the month, so somewhere around let's just observe. So this was the start of July. Oh, okay. I can't really draw, can I? I can't. Because the return back. So this so looks like this. July. Oh, this is the July 1st. This right here is the July 1st. Let's just circle this. And let's find the July 15. Yep, this is the July 15, the half of the month, right? This right here. So, this right here, July 15. Let's find the July 30 here. July 30. Yeah, very similar sort of a cycle as pound USD. So this is the July 30th. Right here. So the candles move down, demand tap, back, end of the month, can be this sort of cycle. So the cycle is shifting every time. So we will see. We will see what's going to happen. I'm expecting more bearish movement than anything else. So we will see. we will definitely see. Pound JPY daily candle is bearish at this point of time. 4-hour candles. Oh, sorry about that. So the 4-hour candle is breaking low at this point of time. Rejected a daily rejection level, and the channel has been broken. Channel has been tested in about vicinity has been tested. There's a higher chance we are going to experience a downside move here. So this 4-hour candle still has 2 hours and 10 more minutes left for its close. So let's see what's going to happen. We'll see what's going to happen. Rum-pum-pum. And the 2-hour candle closing in the next 9 minutes is looking pretty solid. On YouTube, Harsh Kushwaha says, how much you risk per trade? So you asking me that question clearly tells me you're expecting me to tell you a sweet spot, right? Now, for beginner traders, there isn't a sweet spot. It definitely depends how much is your trading account and how much you're willing to lose. So it's very subjective to every trader. So I'm going to say 1 to 2%, because you telling me you're using 1% or 2% out of your account, or even less, is telling me that you're actually giving yourself a larger sample of trades across a week, across a month. So you're actually basically allowing yourself to sustain your account. So I'm never going to risk a lot of chunk out of my account. Again, at the same time, because I'm experienced with risk management and I've been exercising risk management for some time, my risk is going to depend, especially when it's a Monday. It's definitely going to depend. So my risk management plan has clear instructions. I've planned that, you know what, usually on Monday and Tuesday, my lot sizes or my risk is way lower than the normal Wednesday, Thursday, Friday volume. That's what happens. And sometimes I just trade with like a fixed amount of money. It's like I don't actually calculate the this much percentage of my account and whatnot. I don't do that sometimes. Sometimes it's like when I'm confident in a trade, I've seen that happen, and I have some profit left. I just play with some certain amount of money. But it's definitely up to you. The real question is what you're going to use, right? Now, again, I didn't give you a sweet spot. If you're a beginner trader, it's recommended to use the least amount or the least size of lot size, because you want to sustain your account and you want to experience a lot of trades. And when you have a large sample of trades, you will definitely see where you were right and where you were wrong, and you will learn from your trade. And again, at the same time, you will somehow grow your account because you have a large sample of trades, and you're not going to repeat the same mistake. And when you don't repeat the same mistake and you have a large sample of trades, you will definitely learn that, you know what, cutting losses short is going to help you. Now you will start cutting losses short, and that's actually going to help you grow your account. A large sample of trades across a span of week, across a span of month. So that's what you want. At this point in time, candles really bearish. I mean, I love the way the daily level 150 to 765 has been respected here. Has been rejected pretty strong. I mean, the London volume was pushing the price up, rejected that level at this point in time, corrected everything that happened throughout the Asian session and everything that happened throughout the London session. So the bias is a sell, a clear sell. So this is the first day of the month again, as we talked about, and I've seen a lot of ranges. I've seen a lot of setup for the rest of the month. So maybe this day could be a setup day, or where the candles are going to figure out where to grab liquidity or where to go to before moving in its original direction, right? So we haven't even progressed like few days in the month. This is the first day of the month where the banks are opened up. So we'll see. We will see. And on the YouTube, if you guys ask questions, 100% I'll answer. So Hars Kushwaha says, thanks for the advice, bro. I mean, it's not advice. I'm just giving you a tool, right? And you have to evaluate the tool or the idea, and you have to kind of make a decision. That's going to help you. Okay, I never give you specific advice, obviously, because specific advice, I mean, there's no such thing as specific advice, to be honest. If you were somebody who was actually close to me and showed me your whole history, your psychology, and you show me where you're standing, then I'll give you a specific advice. But if you are somebody who I don't know in a personal level, I can't give you a specific advice. No. I'll give you an idea that you can evaluate and see for yourself. And if it makes sense, I mean, that's what you're going to do. Simple as that. Rami Malik says, can you please tell me what's a liquidity grab? Interesting question, Rami. So what happens is, okay, I'll give you ideas about candle movement, right? So what happens is the higher time frame candle, usually what it does is it actually moves in the opposite direction before moving in a trend. So the opposite movement that happens in a candle is a potential liquidity grab. So what is a liquidity grab? Liquidity grab is like the candles or the market wants to gather that extra order or before moving in the original trade. It wants to allow the institutions or the big entities to enter, and that liquidity grab is the spot where the entities would potentially enter. Now, we don't know exactly if that was the point where the entities entered, but usually what happens is after the liquidity grab or after the entities enter in some sort of position with a long wick where there's a big fluctuations of buyers and sellers, the candles move heavily in the opposite direction. Now, sometimes we can spot a liquidity wick very easily, but sometimes it's confusing. So right now, the move on the top, this is definitely a liquidity wick, or this is the point where a lot of institutions entered and stuff. Definitely makes sense. And look at the way it's moving down, right? So definitely we can spot and we can say that, you know what, this was definitely a liquidity grab on the top. So before the daily candle could move down, the candles retraced the price higher so that a lot of entities could actually grab the premium price, and this is liquidity grab, or the movement in the opposite direction before moving in the original direction. At this point in time, we're starting to break that 152 to 10 sort of level. So I'm trying to take a sell below that level. If this hourly candle finally closes below, I mean, a retest around the broken support will be lovely. But if it's to move down, if it's actually looking pretty nice. So I'm not going to rush into a trade on a Monday, especially when it's the first day of the month. But the sells are looking pretty good. The bias is sell. So I'm planning to trade. So I have to plan the trade and I have to trade the plan, right? Simple. So I have to see candles close below this level first, and then I have to plan to trade that exact idea. I cannot take a trade right now. If the candle's just going to push down, it is what it is. I am waiting for my trade, and I have to trade my plan. So let's see what's going to happen. If the hourly candle closes bearish, beautiful. Just beautiful. Wow, look at the 2 hour, look at the 1 hour. This is amazing. I have to see candle close at least below this support area in the next 20 seconds. If the candles close bearish, so what I might do is I might place a stop loss below 152.210 sort of area. So for now, I'm just waiting for the candle to close. If this candle closes bearish with a wick at the bottom, and with a wick at in my direction, I mean, it's pretty good. So we'll see. Now look at this. At this point in time, the hourly candle has closed bearish around this 152.210 sort of area, and this current hourly candle retracing up before moving down. So if this candle could make a high, I mean decent high, that'd be lovely. If the candle could reject 152.325, that is amazing. But right now, it looks like it's going to push down without giving me a proper retest. So I'm just thinking about how I can catch the trade, right? So the hourly candle has closed bearish, and my bias is bias is sell. So what I'm doing is I'm trying to put a sell stop below the low, just in case if the price starts pushing down with a lot of volume. So let's see what's going to happen. I haven't entered yet, so I need to see a top wick before anything. Let's see what's going to happen. Oh, look at the way it's retracing, right? So the higher it retraces or higher it moves, grabs its liquidity and moves and it starts moving down. That is going to be amazing. And that's what I want. That's exactly what I want. So the halfway through the 4-hour candle, obviously this 2-hour candle closed bearish, a strong bearish candle. The bias hasn't changed yet. Obviously, I am expecting the candles to retrace up before moving down. One of the most likely position or spot to retrace till it could be 152.390 sort of level. So what I know is for a fact, if the candles are to push down, it can always move in the opposite direction before moving in its original intended direction. So what I know is the market can actually go up, move up, grab liquidity, then move down later. So what that means? That means I'm not going to take an entry right now at the start of a new candle. So a best decision for me will be to wait for the candles to retrace and grab liquidity and start flipping in my direction. Until then, my sell stop is just below. So I haven't entered the trade yet. That is the beauty about pending orders. You can just wait and wait until the candles start flipping in your direction. It's just lovely, right? And that's what's happening right now. I'm not in the position exactly. I'm expecting the candles to push down. I mean, it's just hanging around that area at this point of time. So here's the thing. For example, my stop loss is below the low, right? Now, what I'm anticipating is for the candles to push down with a lot of volume. Now, if the candles are to just hang around here, it's fine, completely fine, because I haven't entered yet. But again, at the same time, if the candles start pushing down and all of a sudden taps my entry, taps my position, and starts moving up, I might even close positions once the candle starts breaking this candle's high, if my position is activated at that point in time. But right now, I'm pretty confident the way it's retracing, it's pretty good. There's a higher chance it can retrace all the way till 152.325 or all the way till 152.390. So all I'm doing right now is waiting for the candles to grab liquidity and do whatever it does and move towards my direction later. So I'm waiting for the volume here. So we'll see what's going to happen. I mean, a lot of beginner traders, I know they would enter right here at the end of the candle. I mean, that's not a good decision, is it? On a long term, you will see that, you know what, this could be an early trade for you. Obviously, you took an entry feeling missed out, and right now you're in a drawdown, expecting the candles to flip in your direction. I hope the candles are going to flip for you. But you know what? In a long term, you don't want to hope. You want to know what's going to happen. You have to learn the market traits. When I say the market traits, I'm talking about what the market does in a regular basis. We know that the new candles have a higher chance to retrace before moving in the direction. So, do you really want to enter when the new candle is beginning? Maybe no, right? So you have to put yourself in the best position to win. And one of those ideas would be to wait for the candles to actually move in a certain direction before flipping in your way. Don't rush into a trade. Rushing into a trade, feeling missed out, are the ideas that causes a trader to lose. Beginner traders, they have this sort of problem. They overtrade, they over risk, and again, on top of it, they take entries feeling missed out. You don't want to do that. You don't want to think this candle is going to move down. You want to see the candles moving down. And that's when you want to capitalize. Okay, definitely. There is a daily rejection from the top. And right now, obviously, look at this. If I have to go into the 4-hour time frame, you definitely see the liquidity grab right on the top. And the candles are pushing down. It makes sense. The way it's pushing down, it makes sense. And it makes much more sense for the candles to push even lower. So if it makes sense for the candles to push even lower, why can't I wait? Because there's a clear range from below 152 to 210. There's in about 52 pips range. So I'm okay about capitalizing from that range. So I'm just waiting. And obviously right now the price is tapping off this 4-hour support area too. This gray area is not just any level. This is a 4-hour support area. If this 4-hour support area is to be broken, look at the strength of this area. Previously, one candle tapped this area, and obviously we broke this area, started moving up, but this was a support area before. So there is a chance this area could act around one more time. So we have to be alert, on a high alert. Now a lot of beginner traders wouldn't understand this idea. Now watch this. Whoever took a sell at the very bottom, around this 152 210 level, you're in a drawdown in about 6-7 pips, and that drawdown could very well be another 10 pips, and could be another 16 pips. Now that is liquidity grab. Market wants to collect that extra order. Do you really want to be part of that opposite movement? Maybe no. Simple idea. Okay, very simple idea. All right, so Jackie M says GJ daily is looking pretty bearish. Jackie says, I have not been trading for a week. Hopefully today I can catch some pips. Yep, I mean, the bias is sell on GJ, so we'll see. We will see if the Monday is going to be any good. Again, at the same time, sometimes we come to the market expecting to catch some sort of move, and what happens instead is the market ranges or it doesn't make sense. So what do we do at that point in time? We just have to be okay about not trading or clicking buttons. Not every day is going to be a clicking button day. Sometimes it's just about showing up to the market for the sake of grabbing that experience or seeing the market in its regular action, right? Now we will see. Just give me a second, guys. I'll be back. I got this couple of guys hooning around my street. Like, I don't know what kind of bike is that, but they're like hooning around my street. Like, boom, 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 boom. Crazy guys. I just hate that hooning sort of stuff. Just give me a second. Looks like Mandish is in the house. Mr. Mandish is in the house.
Hi, Anush.
How's it going?
Yeah, no bad. Anush,
Yep.
I have a small query on GJ.
Yes.
Let me check. Can you check at a 15-minute time frame?
15. Yep.
When 152,670 level was broken?
152,
Uh,
670.
yeah,
152, 670. Yes, sir.
and then the next 15-minute candle went down and small support was formed.
Yes.
Uh, would it be valid for me to take buys there? Because it's a break and retest sort of situation.
Ooh. So that's actually a valid question. I mean, looking at the structure, it's valid to take a buy, but guess what? This is the beginning of the new hour.
Mm-hmm.
And do you really want to take a buy at the beginning of the new hour? Maybe no, right? I mean, the structure work. If you took a buy here, this is a valid idea. If you manage to secure 10 pips, beautiful. And if you manage your trade, because the main thing is you can always create an idea and take a trade. But again, at the same time, did you take a trade or not?
No, no, I already took a trade before when the candle broke above 150 to 595.
Aha,
I was just
595.
live back
Beautiful.
testing.
Beautiful. Oh, nice. So yeah, I mean, Mandish, to be honest, if I was trading this pair, I would have taken a buy. But again, at the same time, I'll keep the idea in my head. I'll keep this idea in the back of the head that you know what, this is the beginning of the new hour. And what I know for a fact is if the candles are to move in a certain direction, if it moves in an opposite direction, right? Now, this was the opposite direction move. Liquidity grab around this 152,765 before the candles could push down. I mean, it's really hard to visualize, right? It's really hard because the structure tells me that, you know what, oh man, it's going up. But again, at the same time, we have to keep this idea in our head that this was the beginning of the new hour. So if I switch into the hourly time frame, you can clearly see, look at this. This hourly candle closed with a big ass rejection wick from the top, and especially around the daily rejection level. So I would definitely anticipate the next candle to reject that price one more time, or even without rejecting, starting to move down. So what happened next at the next instant is this candle. This was the beginning of the same entry point you talked about, right? This candle
Yeah.
closed with a long rejection wick. I would doubt a buy. I would really doubt a buy. Why? Because this hourly candle closed near a resistance, near a daily rejection area, rejecting it heavily. And obviously, 15 minutes support, looking at the hourly rejection was almost like, oh, you know what? It's invalid. It was almost like, oh, you know what? It's invalid. But the structure made sense. 100% the structure made sense on a 15. All we had to do at that point in time was to be aware of the rejection areas and be aware of any possible retest. So if you look at this candle's maneuver on a 4 hour, you can clearly see this was a break and retest on a 4 hour. Now look at the candles. The candles are naked one more time. Now, if I have to draw a support area, this was a support area previously. So what candles did was around the end of the month, the candles closed bearish. The most recent price action was from a resistance. This was the first candle that actually successfully closed below that support area. And this was the second candle that actually successfully closed below the support area. But guess what? There wasn't a decent retest around the support area. Now, that's when the prices started retracing that previously broken support area on a 4 hour, and the candles started pushing down. Now it only makes sense for the candles to push down even lower because the 4 hour support was broken and is retested. If this 4 hour candle closes bearish, there's a higher chance the left side traffic is going to be achieved. So that's what I'm waiting for here. That's my main setup today. And if that's going to happen, I mean, if the market's going to just range today and it's going to move that way tomorrow, I'm okay about it. But I'm definitely going to catch this move. I'm definitely going to catch this move below 152.210 because look at the way the range is there, right? So the range is so clear. I mean, I'm pretty sure if the price is to move down, this is going to be the target. This is going to be the range I'm going to trade into. That is going to be the range. At this point in time, the hourly candle has tapped that 152.325 sort of a level. I'm just waiting to see if this candle could flip bearish, because again, the same idea applied here. This hourly candle moved in an opposite direction before moving down. So if it's to grab liquidity right now, it's making sense. All we got to see is we got to see candles flipping bearish, and on the break of the low, that's going to be the confirmation right there. On the break of the low, and there has to be some sort of volume in the market. Obviously, if there's no volume, I mean the trade could be invalid because there's no volume. So for any sort of idea to be a valid idea, we need volume side by side. So we'll see how it's going to be. We'll definitely see how it's going to be. This 15-minute candle right now, I mean it's almost like a new high, a new daily, new low. If the daily low is made, I mean, there's a higher chance with momentum, it could be tested. So for an early entry, I need to see a resistance. If I am not willing to take an early entry, I have to see candles breaking 152.210, break this low, and then my pending is going to be activated. Simple. So kind of waiting. All right, so the guys on YouTube, guys, we have like more views but less like. Please like that video because your like is going to help spread this video to other guys in the community. So please do like the video, like the stream, and obviously share it too. If you can, just share it to your friends. And obviously, thank you. Thank you for watching the video, right? Again, at the same time. Thank you very much. Yep, the deeper it retraces, it's looking better and better. All right, so IC Tony says, I've been liked for sure. Thank you, IC Tony. Thank you very much. Thank you for the love and support. Thank you, sir. We are in the first few minutes of the hourly candle. Hourly candle still has 41 minutes left for its close. It looks like this is a potential retest looking at the hourly candle right now. And the retest is looking pretty decent. And it's retracing even deeper. The higher it moves, maybe even potentially tapping 152.390. I mean, it's going to get even better and better. So have to see. Have to see what's going to happen.
Anuj,
Yes, sir.
let's assume a trade.
Yep.
If this previous hourly candle had broken below 152 to 10, and
Yep.
and um, can I annotate?
Yeah, you can. Just give me a second. I'll turn the setting on.
Mhm.
Just give me a second.
I've been trying to figure this out.
Annotation? Is
No,
that
no, no,
it?
not annotation. This trade, this setup.
Yep. Is it better now? Can you try? Give it a try.
Yeah. Okay.
Yep. Go on.
So, so suppose this candle went down here.
Yep. If the candle closed below, yes.
Yes, and another candle like this candle is moving up. It went up,
Yep.
and another candle formed a rejection candle.
Yep. Let me draw it for you. Let me draw it for you. I'll
Yeah.
draw better.
Okay, okay, yeah, yeah, yeah. You know what I mean, right?
Yeah, I'm getting it. I'm getting
Yeah,
the idea.
yeah,
Okay, I'm gonna draw for you. Okay, so you're talking like you're saying this, right? So you were imagining if the candle were closing below like this with a
yeah.
wick, yes, and
And another candle forming bullish,
okay,
going
bullish
up
candle.
for a retest.
Just give me a second. I will draw it even better. Dun dun dun. Let's just do our drawing skills 101. All right, so this candle closing bearish below 152 to 10, somewhere around here, and the next candle closing bullish. It's
Okay,
going
there is
up.
already a candle. Yeah. So
And
and another candle formed bearish.
yep,
Went
with a
bearish.
wick, right? With a wick, is that it?
Yeah, with a wick, obviously with
Uh-huh.
a wick.
Uh-huh. And
So at this point of time,
yep.
will it be valid to take a sell?
So I mean it definitely depends on traders, right? But if I was
Mhm.
taking a sell, I wouldn't take a sell above 152 to 10 because obviously
Mhm.
I know for a fact if there's momentum, it's going to push down. I know it. And I don't want to miss out on the trade. That's also logical. But again, at the
Mhm.
same time, I want to put myself in the best position, right? So I'm only going to take a trade after first confirmation. So what's going to be the confirmation? The confirmation is going to be when the candle is going to move in the opposite direction or start flipping bearish. That's one of the confirmation. And I need to see a wick on the top. Obviously, the wick is going to be there. And the
Mhm.
third confirmation is going to be that, you know what? The candles are going to move down in the last half. So is the first half almost over? Yes, the first half is going to be over in the next 4 minutes. That means in the last 30 minutes, if it's to move down, yes, I will take a trade. But for me personally, I'm going to take a trade only on the break of the low. That's going to be the best position to take a trade for me. On the break of the low, that means that's the third confirmation for my trade, for my idea to be valid. So if the candles are to push down on the break of the low, that's going to be my entry point, and my risk is going to be same. It doesn't really matter if the stop loss is above this high or is in the middle of the range because I'm anticipating volume. My risk is going to be same. It's not going to be more. My risk is not going to be like, oh, before I was using $100. Now I'm not going to use all of a sudden $400. No, it's going to be the same. It's going to remain same because I'm anticipating the volume to push the price down. I
And
would take a trade. I would take a trade.
what if the retest was below the support?
What if the retest was somewhere around here?
Uh, if the candle went down and another
Yep.
candle went up, and suppose this is the support, and the retest is happening here below the support.
Aha. So you're saying to me you're looking for a retest below 152 210 at that point in time, is it?
Yeah.
Uh-huh.
What if that's
I mean
what if
that could be the case too. That could be the case, but that would be an early trade. I mean, this whatever's happening right now, whatever's happening right now is the ideal trade. Honestly, it's the ideal trade. It's the ideal situation. Sorry, not the ideal trade, it's the ideal situation, honestly. Because obviously, if the candles would have closed below 152.210, that candle would have been a huge ass bearish candle, right? And obviously, I would be expecting sells, but taking a sell right at the beginning of the new hour, it'll be too bad. Not bad. Sorry for the lack of the words. It's not going to be too bad, but it's going to be a possible trade where there's 50 and 50% chance. But right now, the way it's moving, if this candle starts flipping bearish, there is 80% chance for the candles to move down, fill the wick at the bottom, and just travel through this clear range. Travel through this clear range. So that's what I want to see. I want to take a trade with a higher edge or higher percentage of, confidence. Did I answer your question, Mandish, by any chance?
Yeah, but I'm really not comfortable on trading when the candle breaks the low. It has already moved more than 10 pips most of the time.
Aha. So, Mandish, at the end of the day, you have to ask yourself the real question. The real question is, do you really wanna secure 20 pips trade all the time, or do you want to take a trade with more confidence, right? The break of the low is going to be a better confirmation, to be honest. If you back test, most of the times candles breaking low, that's the best confirmation ever. Because for the candles to move down, according to the textbook or according to the theory, candles have to break the low, fill the wick, and start pushing down. Lower low, lower high, lower low, lower high for a bearish trend, right? And that's what we want to see. I know what you mean, because sometimes we enter at the break of the low, and with the market open, it's just another invalid trade. I know what you mean. At that point in time, we have to just call that trade, you know what? That was it. That was an early trade, or the market was volatile right at that time. The idea was valid, and the candle starts moving in the direction later on. So what you can do is you can give your trade a second chance at that point in time. That's why risk management and applying your fixed risk is really important. Now at this point in time, I can give you a clear example. For example, if I was to take a trade on the break of the low, I also know the fact that, there's market open coming around the clock. So do I really want to be in a trade around that market open? Maybe no. Because what I've seen over time is maybe I have taken an entry around the market open time. The market's going to flush the entries in any instrument. If I was in a pound yen, the market's going to move up before moving down. Because the New York market wants its premium price as well. That's why I'm also expecting the candles to retrace all the way up to 152.390. Because the New York market's not just going to push down. Maybe it's going to push down, but it wants to grab its premium price. It wants to take a piece of its pie too. So the pie may be here, and the New York market wants that pie, or the pie may be here, or the pie may be here. I'm definitely going to execute because I can see the structure. The structure makes sense. But again, at the same time, I know it's New York open right by the clock. So if it's an early trade, maybe I'm gonna give it another chance when the candle starts pushing in my direction. Simple. So that's how I'm planning for my risk as well. See, now the risk is not going to be like if I used to apply full risk before, this is not going to be the full risk trade. Maybe it's going to be less risk. Why? Because I know the market's going to move in the opposite direction. If there's volatility, or if it's trying to grab the piece of the pie, and so and so. All right. So this is something anybody can note down and observe. Obviously, these are the tools that a lot of traders don't discuss, right? So if you were to understand market trades, you have to start noting down these things. You journal these things. And obviously, right now, you note it down. You write your ABCDs on your paper. That's going to be writing these ideas on your paper. And later on, as you see this happening several times, you don't need to journal anymore. Now you know it by your heart. Right, so simple as that. Now, this candle is trying to flip bearish at the second half of that candle, which is pretty good. It has retested that previously broken hourly support, 152.325 sort of a level. My sell stop is below the low. So I'm anticipating the candles to push down with volume. But again, at the same time, I haven't taken a market entry because that's the beauty about pending order. It's like, you know what? My idea is there. I'm willing to execute, but I'm only going to execute when the market actually when the market activates my position. It's not like I'm going to take a false entry, or if I'm going to take an early entry and I'm going to hold it, and I'm going to I'm going to stay there with a nervous hand or a sweaty hands. I'm confident with my setup, and my setup is only valid once the candle starts breaking low. So I will see what's going to happen next. Our previous 15-minute candle closed bearish with a small body. I mean, it's a good sign for the candles to push down. So the market, what I also know is, because there is market open coming in the next 28 minutes, the candles can just range side by side before pushing down. My ultimate idea that I have planned, my trade is below 152.210. So I have to trade the plan. As it's progressing, I'm still waiting. That's the beauty. Some of the guys who took a sell, I mean, they must be so nervous because there is a market open in the next 28 minutes and they are not sure. I mean, the structure is making sense. Everything's making sense to push down. But what if the candle pushes in the opposite direction? They are not only going to be nervous, but they can't close, they can't manage the position, and all of a sudden they're in drawdown. That is something you want to avoid. And I've learned over time is that, you know what, me evaluating trades and actually placing pendings and letting my idea be alive and only letting the market activate my position is actually a really good idea. It has turned out to be positive for me. Now, that's another tool somebody can evaluate, somebody can study and use it for their advantage. Now, somebody who took a sell here, man, oh man, they must be so nervous. They're hoping for the candles to push down. They're hoping. They're saying, "Oh man, you know what? If the candle's going to push down, that's going to be lovely. I hope." And the hopes are not going to work, man. The hope is not going to work here. It's not going to work. Your hoping is not going to work. So you have to see candles moving in a direction. So for now, the candles retracing, which is kind of logical. I mean, the candles can do whatever it likes. At the end of the day, we expect something out of the candles. Now, this is psychology 101. We expect something out of the candles, and the candles can do whatever it likes. You have to keep this in mind that, you know what, the candles are controlled, or candles move by influence of an external factor, and you never know what that external factor is. So be sure to expect the unexpected. And my idea is still valid. I mean, my sell stop is down below. So let's see. We will see what's going to happen. We will see what's going to happen. And the candles are retracing pretty nice. I mean, the deeper it retraces, I mean, better for me. If somebody is in a position, man, it's better. It's better to manage your position, as we talked about. I mean, that's what we talked about. The first, the few minutes before the market opened, the 8 a.m. New York market open candle could be a massacre candle. What that means is that candle has a possibility to move in its original direction. That candle has a possibility to grab the deepest liquidity ever. So, do you really want to be part of that 8 a.m. candle? Maybe no. So, you have to ask yourself the question. And the candles are retracing pretty hard at this point in time. We are 16 minutes away from the market open, and this is the last 15 minutes out of the hourly candle too. So it's actually kind of interesting how this is going to influence the hourly candle to close. If the hourly candle is to push down, I mean, this is a really good situation right here. Really good situation. So just have to see how the candles are going to approach. How the candles are going to move in the last few minutes of the hourly candle. Very interesting.
Anush, you're still
Yes,
looking
sir.
at GA? Still looking at GA?
Am I looking at GA?
Yeah.
Let me have a look. GA.
Missed it trade.
Ooh, GA was
Missed.
beautiful. This
Missed
hourly
the
candle
trade.
closed below the support area. I mean, this was the support area. 189, 165 was the support area. This was the first candle that closed below that area. And obviously this candle did the retest and broke the low and started pushing down. Lovely. This was like a 20 pips trade. Definitely missed out. This is what happens when we focus on one pair, the next pair moves. So pound AUD was the trade. 100% pound AUD was the trade of the day. Such a simple idea, right? I mean, there was clear traffic on the left hand side too. Just just waited too long in GJ. I should have at least had a look at pound 80 just at least once. This was the trade, absolute trade right here. And some of the times what I would even do is I would actually take an entry when the candles would retest that level, broken level, retest, and entry on the flip within about 10-12 pips stop loss. I mean, this was a beautiful trade, to be honest. Moved down in about 29 pips from the entry. So bad. Just missed it. Missed the entry. Just give me a second, guys. Just give me a second. I see Tony says, is that a reversal about to pop off? So we have to see, man. Have to see in the next 11 minutes or in the next 10 minutes we have the New York Open, so we will see. But definitely pound AUD was the trade here. Missed that pound AUD sells. Missed it really bad. Yeah, I think pound yen is also going to drop down here. Higher chances to push down than anything else here in pound yen. Gold is hanging around that area. Right now, the hourly candles are flipping to our direction in the last few minutes. Trying to flip bearish here. It's actually interesting. And the candle's pushing down. We are 10 minutes away from the market open. If the candles are to push down, it's going to break the lows and there's a high chance to push down. Let's see. Sell below 152.210. Is it going to work or not? We will see. We will see in the next few minutes. And the hourly candle showing a potential liquidity grab on the top, which is good, pretty good. Just have to see candles breaking low, and that's going to be nice. Candles breaking low, that's what I want to see. And the candles are reversing down, which is pretty good. In the first few minutes, in the last few minutes. And the only thing I need to be worried about is the next candle. How the next candle is actually going to move, right? If the next candle is actually going to move up before moving down, that's going to be something I have to be aware about. But otherwise, my idea, my bias is looking pretty nice. I'm not in an entry yet. Looks like the candles are going to reverse down, are going to break the low. I just need to see some, I just need to see some sort of volume in the market, because I'm a volume trader. If there's no volume, I mean, my trade is invalid, right? So still waiting. And the YouTube guys, if you guys are here in the stream, just like and subscribe, guys. Just hit that like and hit that subscribe button. We need to grow this community out here. At this point in time, hourly candle has a decent top wick, a decent liquidity wick on the top. Did a retest around that level. And looks like my pending is going to be activated here before the market open. Looks like my pending is going to be activated before the market open. It's kind of nice. And my pending is almost activated here. And I'm in. I am in the cells. I'm in the cells. In the cells. In the cells, sir. In this cell Z. Anticipating the price to push down with volume. So if the candles are to stop me out, I'm gonna give my trade a second chance. Otherwise, this is a this is actually a really good trade. If the candles are to push down, this is gonna be really lovely. So just have to see candles staying bearish, and this is gonna be the market open in the next 6 minutes. So interesting how it's pushing down right now. Pretty interesting. Hourly candle has a decent wick on the top. Now this is going to be my risk management because I'm already in the trade. I mean, my stop loss is above the current candle, right? So the market can stop me out anytime. So how can I actually manage my risk? Let's say I'm in the position. Let's say I'm in drawdown, right? So once I start going in like 6 or 7 pips in drawdown, I might close half of the position. But if the candles are to push down, I mean, it's just as fine, right? So if I'm going to go in 6 to 7 pips in drawdown, I might close half of the position at that point in time. But right now it looks pretty good. So let's see what's going to happen. If I'm uncomfortable, I can close half of the position. because I'm using dynamic risk. This is pretty solid. I can close half in just one button. That's the beauty about using dynamic risk. Right now, in about 4 pips in drawdown, thinking about how I can manage my risk more than anything else. Hanging around that 3 to 4 pips in drawdown, and my trade is looking nice. Hourly candle has a decent top wick, has broken the low. Let's see if the trade is going to work here. In about 5 pips in drawdown, and in the next 5 minutes, the candles can be a little haphazard again at the same time, right? My trade idea could be valid, but in the next few minutes, the candles could be a little haphazard. So let's see what's going to happen. Let's see what's going to happen. I'm in the entry, in the position. Let's see. Market opening up in the next 3 minutes. 3 minutes.
Well, folks, it's time to kick it old school. So you can feel cool. Give it to me, baby. Baby. Yeah.
Hourly candle still hanging around that support area, has broken the low, has a decent top wick, is flipping to my direction. At this point in time, the market's going to open up in the next 2 minutes. So I'm thinking about how I can actually close down the position right now, because I'm in drawdown and I don't like the feeling of drawdown, right? So I'm actively thinking about how I can actually manage my position and enter only when there's volume. So I'm still thinking. Let's see what's going to happen. In the next 1 or 2 minutes, if the candles aren't pushing in my direction, I might close some percentage and enter again when the candle starts moving in my direction. So let's see what's going to happen. Risk management is the key. And the candles are hanging around there, still hanging around there. In about 5.5 pips in drawdown here, thinking about risk management. So not feeling the best, not feeling comfortable with the position. In the next 1 minute, market's going to open up, and I do know that the market gets a little haphazard around these times. So let's see what's going to happen next. Hourly candle closing in the next 40 seconds. The real question is this hourly candle going to close below 152.210, or is it actually going to close above? If this hourly candle is going to close above, It's kind of looking funny, but if this hourly candle could close below, man, it's nice. It's still nice. So let's see what's gonna happen next. 20 seconds.
Maybe we missed again on GA.
Did we? Oh no. God dang. And the hourly candle closed around that area right now. The position is still on. There's a higher chance the candle could retrace up before moving down. I'm anticipating volume at this point in time. So let's see if the candles are to push down or not. We are in the first few minutes of the market open. New York market open, obviously high volume time. So let's see how the candles are going to move here. The position is still on. This could be an early trade. I'm expecting the candles to move down because there's a resistance form here. The most recent trend is bearish trend. If the candles are to push down, this is amazing. So let's see what's going to happen next. Just need 10 pips out of the market and I'll be out. 10 pips and mamma mia. Only need 10 pips out of the market. In the first few minutes of the market open, we haven't broken the low yet. The candle's still hanging around this 152, 210 sort of a level. Let's see what's going to happen. First few minutes of the market open. Looks like the candle's going to retrace up, grab its liquidity before moving down. That's what I think here. The way it's moving, I mean, it's not looking the best. I'm still expecting volume. Right now, the candle is still hanging around the area. Still hanging around there. And the candles haven't broken the low yet in the first 2 minutes of the market open. Candles hanging around that area. Have to break the low. I just need 10 pips out of the market. Let's see. GJ, 10 pips out of the market. 10 pips out of the market. And we are pushing down nice and slow. We are pushing down nice and slow. We have broken the low at this point in time. There's a higher chance for the candles to push down. There's a higher chance for the candles to push down. So let's see what's going to happen in the next few minutes here. Higher chance to push down at this point in time. With volume. We have broken the low. The hourly candle doesn't have a decent top wick yet. So what's going to happen? So at this point in time, what I'm thinking is if the candles are to push down, there is no business for this hourly candle to retrace higher, right? So if the position is going to exceed 5 to 6 pips in drawdown, I might even close some of the position. Right now, it's looking pretty good. There's a higher chance for the candles to push down. So let's see what's going to happen. So I have my risk management plan in my head. I have my position running. So it's all about risk management. For me, the best idea is risk management. If I can manage risk out of my position, I'm on the good side. That's it. That's simple as that. So we are in the first 5 minutes in the hourly candle, and the candles are still hanging around. If the hourly candle is to break the high, its own high, I might close half of the position just for the sake of exercising risk management. Sometimes you willingly managing risk or exercising risk management is actually going to help you throughout your career, or is actually going to help you build that confidence for risk management. And I accidentally pressed that strategy tester button, and it's going crazy right now. Oh my God. Let's see. And it's pushing down nice and slow. Need 10 pips out of the market. 10 pips out of the market. And it's pushing down pretty nice. Pretty nice. Just need 10 pips, 10 to 12 pips out of the market. And we'll be happy about it. Definitely will be happy about it. And it's pushing down in 3 pips in profit at this point in time. 3 and 4 pips in profit at this point in time. 5 pips in profit at this point in time. Just need 10 pips out of the market, and I'll be at 10 pips out of the market. 6 pips in profit. Let's see. 10 pips out of the market, and I'll be gone. I'll be long gone. I will be long gone. Let's see. I'll secure in about 70% out of my position, and I'll let the rest run. I'm going to let 30% run today because I believe in the range. So let's see what's going to happen. It's definitely up to you on deciding how much you want to secure and how much you want to let run. But I am believing in this trade. So let's see what's going to happen. In about 7 pips in profit at this point in time. Just need 8 to 10. 8 to 10, 10 to 12, and I'll be good. Ooh, 9 pips in profit right now. 9 pips. 9 pips in profit right here. Right here. Let's see. I just need 10 pips, and I'll secure everything. I'll secure 70%. Let's see. Secure 70% once I hit that 9 pip. Let's see what's going to happen. 8 pips. 8 pips. 8 pips in profit.
Done for the day, Anuj.
Beautiful. Oh my God, it's retracing before I secured.
I secured.
Oh my God. I should have secured at 9 pips.
I secured at 9 pips.
Oh my God. This is still looking nice, but I mean, it's retracing. So I'm thinking about, should I be happy with just 5 pips? So let's see what's going to happen. Let's see what's going to happen. Should I be happy with 5 pips? I'm asking myself the question now. Let's see what's going to happen. It's still looking nice. We are in the first few minutes of the market. I mean, 8 minutes in the market. It's retracing at this point in time. I don't like the way it's retracing, but it's only showing signs for the next candle to push down, right? So let's see what's going to happen. 8 to 9 pips, and I'll be good.
Where do you think is the possible target?
I think it's going to go down. It's actually going to go down all the way down to, I would say 151,850. 151,850 is my target for today. according to the range. So if 151, 850 is going to be tapped, that'll be amazing. Sanjeev Kumar says I secured 10 pips. Now this is the point where I'm going to secure 9 pips because I don't want to miss out, and I'm letting the rest run at break even. Beautiful trade, man. This is amazing. Amazing trade. I secure around. I secured at the second wave, and it's looking nice. To be honest, it's looking very nice. Beautiful trade, man. Beautiful. Sanjeev managed to secure 10 pips. Beautiful. So it's not about taking a trade, right? It's about how you can manage a trade. Whoever took a trade and managed to secure something out of the market, that's lovely. So I was surprised when Mandish said I secured. I was panicking because I thought, oh man, I'm getting late on securing now. I was waiting for 10 pips, and so that's one of the good things about trading in a circle or a group, because if you're actually fucking yourself up, right? If you're messing yourself up. Or Adnan says, I'm holding, I want 20 pips. Oh, I don't know. I mean, I hope you get your 20 pips, but you should be happy sometimes with whatever the market gives. See when I was saying I was okay with 5 pips, I was trying to plan if I'm actually missing out on the securing part, should I secure around 5 pips? Sometimes you should be happy with whatever the market gives to you. Even I managed to secure like some position at 8, some position at 9, and right now it's retracing. I mean, it's just the market, the way the market moves, right? I mean, if you manage to secure, beautiful. Maybe you can give the trade a second chance. If you didn't manage to secure, it's going to retrace up even higher. There's a higher chance it's going to retrace up even higher. So do you really want to hold the trade? Just ask yourself the question. Ask yourself the question.
All right, Anush, I'm gonna call it a day. See you tomorrow, guys.
See Mandish. Take care, man. Beautiful. I loved it when you said, "Hey, man, I'm secure my 9 pips." That was the best part of the day. I'm gonna put that in my highlights. I'm like, "Oh shit, man, this guy is secured already." I was like, "Fuck." I miss my securing point. I was like, fuck.
Beautiful. See you tomorrow. Bye-bye.
See you tomorrow. Oh my god. Tag me on Instagram and this.
Yeah, I'll do that.
Oh my god. Beautiful. Oh man, that was beautiful. That was beauty. Alright, so Sanjeev says, I secured 10 pips, boys. Oh no, he says, bye Anuj. See ya, boys. See ya. See you later. See you later, alligator. See you later, alligator. So whoever managed to secure, I mean, that was lovely, guys. Just like the channel, just subscribe the channel. I mean, we always stream like this. We present ideas, we present, I mean, beautiful trades. That was amazing. Whoever managed to secure and definitely manage the risk accordingly, place the stop loss at break even and let the trade run. I mean, just to experience confidence. Beautiful, guys. Beautiful. So I'm gonna press the celebration button here, and for the guys in the Zoom, if you don't know where the YouTube channel is, I'm gonna send you guys the link. Go in the YouTube channel and hit that. I mean, you don't need to hit that like unless you don't want to. But we're about to press that celebration button here. So go into the link and I'll press the celebration button. Whenever we call out a trade and we win, we celebrate. So this is the celebration button. go in the YouTube and I'm going to press the celebration button. So guys in the YouTube, like and subscribe, and thank you for coming in. Thank you for showing your love and support. I mean, beautiful, right? Now, just go into the link. Zoom guys, I've sent a message on the chat, and I'm gonna press the celebration button in the next 5 seconds. 5, 4, 3, and 2, and 1. There you go. There you go. That's the celebration right there. Bang! That's it. That's it. That's it. That's it. Ooh, we got the fireworks on the YouTube. We got the fireworks on the YouTube. Beautiful. If you manage to secure something out of your position, man, that's what you want. That's what you want. It's not about taking a position and holding it for 2 days or something. It's about managing risk, securing something out of the market. That's what you want. And when you take pieces out of the market, that's going to help you grow your account. And at the end of the day, you want to grow your account. And some of the guys who manage to secure, I mean, beautiful, tag me on Instagram. And let's spread the word, right? I mean, this is the free stream. What people need, right? What else people need? Free stream, giving free value, answering questions, having a good time with the community. So that was amazing. Beautiful, beautiful. Amazing New York session here today. That was actually really good, guys. Beautiful, beautiful New York session. Kevin says, thank you, Anuj. See you tomorrow. Thank you, Kevin.
back to out the door, then you have magic.
And we are still waiting around at this point in time. Beautiful trade. And that was like money securing moments there. That was really fun. That was a really, really good fun time. Fun time. All right, so it looks like I think I'm going to call it a day here. There's no necessity for me to wait here and try and take another trade. I think I'm going to keep my start of the month beautiful. I want to keep the ledger green. So what I'm going to do is I think I'm going to call it a day. If there's any question from anybody in the next 5-6 minutes, obviously I'm happy to answer the questions. In the next 5-6 minutes, if there's no questions and there's nothing, I'm gonna close the stream and I'm gonna rest, because I want to perform the same way next time. And what I'm gonna do is I'm gonna cherish my profit and whatever I secured, and I'm going to call it a day. There's no necessity to overtrade. No, because I know the market's going to be here tomorrow. I don't need to overtrade. 100% I don't need to. I mean, there's a really juicy range on the downside, but do I really want to force a trade? Maybe no. I know there's a higher chance the candle's going to push down with volume, but I'm happy to call it a day. The idea about calling it a day is really important, guys. Really, really important. If anybody has any question, just go for it. Shoot the question at me. Otherwise, that's just what it is, right? We're going to be here for the next 4 to 5 minutes now. All right, so Ranjit on YouTube, on Zoom says, hey, so my entry was at 152, 125. I hope I was not too late, yay? Oh, all right. So I think, so what did you enter? You got to send me a chart, Ranjit. You got to send me a chart saying, hey, man, you know what? I entered right here. This was my anticipation and so and so. If you tell me you entered at 152, 125, right now it's not looking the great. So probably risk management is the best idea, Ranjit. But if you have a chart, just send it to me and I can have a look. All right, so this is Ranjit's chart right here. And let's have a look. Let's have a look at Ranjit's chart. Oh, I can't open. So you probably have to send me the chart. How do you send me a chart? Is by clicking this button right here. Click the snapshot and send me the snapshot. Ranjit, if you send me your trading view whole link, I don't think I can log into your trading view. So it doesn't make sense, right? You got to send me the extension or the link. Let's just have a look at this. All right, Ranjit. JM, so what did you enter? What is your idea? What are you looking at? Ranjit, if you send me a chart with the lines, I'm just looking at the lines, right? So what did you enter? You gotta point it out. So how do you point it out? You gotta write down some of the information out there. So you gotta write, you know what, you're gonna write, you will need to write number 1. This is where I took a sell. Number 2, this is my resistance. So what was your idea behind the trade, right? Now, an important thing is the idea behind the trade. You want to tell me your thought process behind the trade. So you got to send a chart with a proper zone. with the proper zone, with proper levels, with proper labeling. You got to say, number 1, this was my trade. Number 2, my bias was sell. Number 3, this was 30 minutes after the NY opener, whatever that was. And you got to send me a chart. Ranjit says, sorry, Anuj, this is taking longer than expected. No, man, take your time. Take your time. I'm going to be here for another 3 to 4 minutes. So take your time. All right, guys, looks like this is the point where I'm going to call it a day here, right here. So that was actually a beautiful session. I'm actually going to call it a day. It looks like Motsov has just come in. Motsov, you've just come in at the time I'm calling it a day. Oh my God. Never mind. Maybe we hang around the Discord or something. There's always tomorrow. Yep. Yes, sir. There's always a tomorrow. That's the spirit. There is always going to be tomorrow. Yes, sure. You can come in the Discord. Yes, sir. Oh, so the guys at the YouTube, I'm going to call it a day. Have a beautiful day. Make sure you guys subscribe to the channel, because if you don't want to miss out these streams, I mean, later on, you know what we're going to do over some time? Once we've built that 1,000, 2,000 subscribers, and we have a regular views of 1,000, 2,000, maybe we will limit the channel to them only. Because maybe we want to teach a group of individuals out there in a consistent basis, right? So make sure you subscribe. Don't miss out. Until then, thank you for coming in. Thank you for supporting it. Thank you for your love and support. Until next time, take it easy. Don't overtrade. Don't over risk. Have a beautiful, beautiful day. I'll see you guys next time.